If you've thought about gold even once during this week, this video is for you. A lot of people are rushing to buy gold before the prices increase further. On the other hand, a lot of people are trying to sell whatever they have. But both of these are reactive decisions. One thing to remember is that the news doesn't affect all of us in the same way. So last week, the Prime Minister asked us to pause buying gold for a year. A few days later, the import duty on gold almost doubled overnight. So whether your family already has gold, you've been thinking of buying gold, or you've invested in some, let's see how this news affects you in your specific situation. First, a quick context because this matters. So basically, India imports a lot of its oil, and the oil prices are increasing because of the conflict in West Asia. India also imports a lot of gold, almost $72 billion worth of gold in FY26 alone. Now, the problem is India pays for both of them in dollars. So that means a lot of dollars are leaving the country right now, which impacts the rupee. The rupee is already past 95 per dollar. So this is the situation the government is trying to manage. So basically they're saying the less gold we buy, the less gold will be imported. Fewer dollars will leave the country and the less pressure on the rupee. But what does this situation mean for you specifically? People talk about gold like it's one decision, but it's not. There are 4 different situations and therefore 4 different ways to think about it. Situation 1. You already own gold. So if your family already owns gold, like your mom's jewellery, stuff you've inherited, any coins from past festivals, nothing really changes for you. If anything, the value of your gold is worth more than it was last week. Situation 2, you were planning to buy gold for wedding, festival or as a gift. Now this is the situation the Prime Minister was talking about. He didn't ask us to sell all the gold we have. He basically asked us to pause buying gold for a year, including weddings and functions. Now, if you're in this situation and you want to honor this, then there are 3 alternatives for you. First thing is, use the jewellery you already have. A lot of Indian families already own a lot of gold without realizing. A lot of them are in the lockers barely worn. And there's something really nice about wearing jewellery which has history in them and is filled with your family blessings. But if you want to wear something which feels a little new and different, redesign the existing jewellery. This is something we used to do all the time. One thing to be careful about is just have everything written down by the jeweler before you give away your gold. The melting charges, wastage percentage, new making charges, all of it. Because this is where a lot of us get overpriced and we don't realize until it's too late. The second one is renting jewellery. In a lot of Indian cities, this is a proper category. And for jewellery that we'll wear only for one event and barely ever after that, renting is a great alternative. Worth pricing it out at least. And the third one is wait. If your function is like a year on from now, you don't have to decide anything this week. The appeal itself is for the year. So waiting a few months is exactly what's being asked for. Situation 3. You were thinking of gold as an investment. First, a quick reality check. Gold itself doesn't make people rich. People invest in gold so that when everything feels uncertain, gold tends to be a little more steady. Think of it like an insurance to your portfolio and not the portfolio itself. Most financial planners recommend a small part of your investment in gold, not half your savings, just enough to balance out when the other parts of the portfolio feel shaky. But one important thing that a lot of people miss is that count your family gold in that as well. Like the gold in the jewellery, inherited gold, gold coins, all of that is counted too. A lot of people separate family gold and gold as investment, but technically everything is gold exposure. Situation 4. You have gold ETF or gold mutual fund. Gold ETFs or funds are basically backed by physical gold. The ETF or the gold fund basically tracks the domestic price. And the domestic price of the gold has increased partly because of the duty hike, but in a way that is actually good for the current holding because the value of the gold investment has actually increased. The Prime Minister's appeal wasn't for the ETF or the gold fund investors. It was basically for the larger pattern of consumer buying for festivals, weddings and gifting, which basically drives the bulk of gold demand. The biggest risk this week isn't the duty hike, it's people's reaction to it. Some people panic buy, they go to the jewellery shop and quickly buy because they think the prices are going to increase soon, but they end up buying a lot more than they plan and possibly at the worst moment. Some people panic sell, they think all gold is bad, so they just sell whatever they have. but they end up losing the asset which was quietly doing its job. Both these reactions are about the news, they're not about your life. What changed is the price of the new purchase and what the government is asking us for the next 12 months. That is worth being thought over, not panicking over. So this week, the news was loud, the appeal was direct, and the duty hike was sharp. But don't make reactive decisions on long-term things. So that's it for this video. If you like this video, make sure to check out these other two videos, which I'm pretty sure you liked. So I'll see you soon in the next video. Until then, bye-bye.